Welcome to Trading Lounge and the Bitcoin report for the 23rd of April. I'm going to start with the crypto index first, and the reason for that is because it's taking a balanced view between Bitcoin and Ethereum, because Ethereum has taken out the top here, over here, and Bitcoin has just sort of folded lower through here. So this is a nice balanced sort of view of the pair of them, and looking at it as corrective. So we know that in all cases we've got this as an A wave, a B wave, and a C wave here for the A wave. And in both cases with Ethereum and Bitcoin, we've got this move here in three waves up here. So we can look at that as the A wave and the B wave here, and then looking up for the C wave topping out in that regard. So we'll still see further downside to come from this crypto index, whichever way we look at it. But as an A wave, a B wave, and a C wave here, we could say that we are, well, towards the end of it now, towards the end of this correction. But at the same time, we also need to be a little bit mindful that, you know, when we're talking about wave fours, because that's what we're talking about, we can be looking at more complicated sort of corrections that could be more time consuming as well within all of this. So we need to take that on board as well. And we also kind of need to take on board them all finishing sort of roughly together. And that will also mean, you know, all the altcoins will be in that sort of space there as well. So in simple terms, we can look for an A and a B and a C wave, and then we're done and dusted with this. But we also need to be careful that this wave 4 here is not just some wave A over here, and then we still got a B and a C to go, because that's what can happen in wave 4. So, you know, we just need to be mindful of everything when we're trading wave 4s. It's not like we're in a trend, or it's not like a wave 2. So out of waves 1, 2, 3, 4, and 5, wave 4 is the most complicated one. So, you know, we just need to be a bit diligent, and there's a whole variety of counts. There's a dozen different types of corrections that can occur, but because we're in three waves here, it pretty much we can eliminate half of those corrections. So that makes it a little bit simpler. But any particular pattern that I have, or you have, or somebody else has, that in a wave 4, well, anybody could be correct really for it all. You know, we can just all do the best we can. My philosophy is always, well, allow wave A to come down first, and then try to see if it's in 3 waves or 5 waves. That's step 1. And then never make a trade until you know that you're sort of near the end of it. But even when we get to the end of here, if we count 5 waves down here, I won't do this on the crypto index, but, you know, once we get 5 waves down here and we can look for a setup, we can take that setup, but we still need to be mindful that, that we could just be, in a wave A over here for that. Do you know? So there's a lot going on, so we just need to be a bit careful. But anyway, the crypto index is a nice balanced flat pattern here, where the Ethereum has taken out the top here, so that makes it a I mean, this is Bitcoin just on the daily chart here. It's just sort of dropped here. We'll talk about that in a moment. But we can see that this is the 4-hour chart here for Ethereum. We can see it's taken out the top here. So, I mean, technically that should make it an expanded flat correction. So I have that on the hourly chart. Yeah, I do. So, I mean, it would look a bit like this. So an expanded flat correction is simply like the crypto index here. We'll just explain this. I mean, it's all simple and you probably know it anyway. This is like a regular flat pattern here, and this is an expanded flat pattern. I think we could just go through them a little bit. I know it's a bit boring, but you could just speed through it. So the market comes up here and has 3 waves to the downside here. So if it's just 3 waves, because it has 3 waves back up here like this, it's kind of just flat here for this, and that's what the crypto index is basically doing. And then I'll have 5 waves coming down here for that. So that will be, that's a flat pattern, and it's labeled as a 3-3-5 structure. So that would be the crypto index here as a 3-3-5 structure here. Now that's the regular flat. There's 3 in the flat family. The other one is the expanded flat, where we come up to the top here, we come down in 3 waves like we have done, and then we have 3 waves to the upside, but we take out the top here. And then what normally happens is once we take out the top here, then we get 5 waves down here that takes out the low here, and then that's the trap here for the bears, and then we move up from that way. So it's a bull trap here and a bear trap here for that. And the other one is just the running flat, which is 3 waves down here, 3 waves back up here, and then 5 waves here. It just kind of running. Maybe we get that, in this, but it's sort of just running in that regard here. So they're quite rare, but Ethereum could, play a part in that for sure, but our job would be to count 5 waves down in this, which regardless of whatever. Now, so that's those two. So I just want to spend a bit of time on Bitcoin because it's the alpha coin. And there is different ways to count this top here as well. I know that I can count this from here to here in different ways as well. I've labeled it like this here because it's kind of, if I look at Ethereum, I don't know if I've got that on the daily chart here. Yeah, okay. So with Ethereum here, it's quite nice to count it as 1 and 2 and 3 and 4 and 5. It's not a problem. So we can use that wave 4, and that's what I've done. I've done in Bitcoin here as well. I've used this wave 4, but I know that we could look at it in terms of an ending diagonal triangle, which is certainly not on that one, or is it? Not that one. Maybe on this one here. So we could look at it like this as well, and this has been pointed out to me. So I just want to acknowledge people's think of wave 3, 4 here, then 1 and 2 and 3 and 4 and 5. That's possible. But something, at the end of the day, it doesn't matter, because that's the top, and whichever one we pull down here will be looking at the 38.2% retracement level, and that comes down into the 40,000 mark here. Yeah, I guess if we use this one here, we could look at the wave 4 of 1 lesser degree, and that would bring us down to 30,000. But that would be a much deeper correction at that point. So it's possible. So, I like to acknowledge things and not to stick my head in the ground. But coming back to this one here, since we've understood that there's a top in place here with a move down through here, we've had to look at this wave 4 of 1 lesser degree at the 38.2% retracement level. So in this space here somewhere, we know that the 50 is going to, 5 being the second strongest number, is going to be a strong market in all of this. And I'm kind of looking at it as well. I mean, it might sound a little bit weird, but the arrival here, the reaction here, and then 5 waves up here for the first high above the level, and then the ABC here. So I kind of think this is all still a correction at this level here, because I know number 5 being the second strongest number, and to see such a small correction here, it will left me scratching my head a little bit, So I think this has all got to do here with the 50 here. And it never made it above the 65. So normally in the 65, you know, we call it halfway between two, at this degree of structure, we call it a medium level. It's halfway between two major levels. But when we're using it more like on an intraday basis, we would use it as the lower end of group 2. So 65, 72 in here, and then 80. But because it's this degree of structure, we just use it like this here. So yeah, so you've got your introduction to the number 65. It could be 6,500. It could be $65, $6.50. Yeah, it's a fantastic number to, you know, to put in your toolbox, so to speak. Anyway, back to this. So how do we count this down here? So the first thing is that I think that we just need to be, as we're coming down here, we just, as I was kept pointing out, we just need to be mindful that the market can pull down to this point here. So any trading that you do, you need to be mindful. Yes, of course, we're going to get support at 50, and yes, there will be a bounce off that and so on. And so I want to talk today about that bounce, you know, and how can we count this down here. So we're going to be looking at a few different ways to do that. I think one of the things that we need to be a little bit mindful of is that with Ethereum and the crypto index, we've already got the A wave and the B wave in place here. So we're in the C wave here. Now, how do we juggle that with this move down through here? You know, is it possible that, as I mentioned, that this A, B, C here is going to extend out further, not just in the A wave, but in this case here, we could look at it, copy this here and put this here as wave D here, and then wave E over here for this, and put this wave 4 over here for this, and we get a triangle pattern here, because that's not out of the cards here either. So somewhere in here, we'll just put that through there, and we can put something through here as well for this. So we could end up with the triangle pattern here as well. That's you know, that's on the cards as well here for this. So we've got to kind of think a little bit more into the future a little bit with these here, of like, well, how can these, you know, instead of just a normal A, B, C regular flat here, how you know, what possibilities are there that they could extend out further than this, you know? I think that the crypto index could do that, because it's kind of, this one is handling 10 different coins, so to speak, markets, products. So, but the Ethereum is a little bit more, well, I don't know. We've got to be a bit careful about this as well. I mean, this be another, it may not be an expanded flat here for this, you know? That's the other point, you know. So I've got to kind of think about what it could be at this point, you know. But if it's still got to, if it's taken if it is an expanded flat and taken the top out here, well, then it's going to take the low out down here as well. I know you might say, no, that's impossible, Pete. You know, it's too strong and all the rest of it. And I agree with you in that regard. It does look strong, and that's why they call it a bull trap. But if you're going to trade it long, you would want to. Well, you got the first high above the level here now, haven't you? So it kind of just went straight through. So normally what happens is we'd call that the overshoot pattern. So we don't really sort of look at it too much, but it's like this. If it doesn't stop here, the distance it goes above is normally the distance it goes below here for that, when it doesn't stop here, because in most cases 90% of the time it will stop here and have a correction here, but it hasn't really done that. It hasn't done it here, but it's just sort of pushed up above here. It would need to sit, if that's it sitting here and it's gone down here somewhere, if it is, it would need to have that second high come into play here, and that would be the long trade at that point. Let's just say that it can move up, but I find it difficult to move up because this move here from the low here is in 3 waves here. So it makes all of this corrective, but you definitely need, if you're going to go long here, then you should have traded long to here, got out, and then you wait for support. Right. Anyway, back to the to this particular pattern here. The pattern that we've been working all this week is, well, we've been working a couple of them, but the main one has been this one on the 15-minute chart here. And I'll just need to bring some more data in for this. So from the top there, looking at it as wave 1 here and 2 here, and then wave 1 and 2 here, and then going down for wave 3 here, and then looking at this as a triangle pattern here, as an A and a B and a C and a D and an E here for this, and then looking at 5 waves down here yesterday as 1 and 2 here and 3 and 4 coming back, and then wave 5 here. But that would just leave us that blue wave 3 at that point. So we've got wave 1 here and 2 here. So all of this would be down here as wave 3, 4 and 5. So this would just still bring us down for the A wave here. So we would come back, once this is finished here, we'd come back to the 38.2% retracement level here in 3 waves here. All the indicators will be, you know, well over sold at this point, so we'll see a bounce down, we'll see bounces down here, then wave 5 coming down here, and then the A, the B and the C for the B wave here. So that puts, you know, that puts that crypto index way out, doesn't it? Because we've got the B wave there already, but it might be the time that this comes down, and this might be in 3 waves coming down here for the C wave here, and then the D wave, and then the E wave here. So that could be the time consuming thing that we need for this over here, because we still need the C wave over this, and we still need to reach down to our 38 point, you know, blah, blah, blah down here, for our wave 4 here. So this is how this could play out here for this. And I have to say, I kind of feel comfortable with this. I feel comfortable that, about this. Now, yesterday and so on, we've been through all of this. Yes, we could count 5 waves in here, but whichever way you look at it, this one here overlaps that. So we could look at this as wave 1 here and 2 here, and then we could look at this as wave 1 and 2 and 3. No, see, it just doesn't fit. So, and that overlaps with that. This is in 3 waves. That's okay, because we could look at this as wave 1 down here and back for wave 2 here, and then down for 1 and back for 2, and then down for 1 and back for 2, but that overlapping that. So we'd have to look at that slightly differently, and we will look at that slightly differently. But as a triangle pattern, it's got an A, B, C, D, and E here for wave 4. So 3 and 4 here, and then coming down for 1, 2, 3. I'm going to see a little rally here. It'll have one more little high there. That's probably coming in from that top there roughly to that low there, the 38.2. So that will come in roughly around there. So we're not that it matters, a big deal. And then come down for wave 5 of 3 here. And then we're going to see this bounce. It will take us back up to the center of that supply within the triangle pattern here. This line through here, the 55, will be roughly about where it is, I'd say. That's where it's all sort of happening. We can just check on that here. So we can take the top of wave 2 here, of course, wherever that is down here, and we'll get that 38.2% coming in here for that. So anyway, we'll get to that when we get to that. So this is one pattern that could play out here. Now, if we were going to take the crypto index and go, okay, well, B wave is over here. We're just looking for 5 waves to finish down here, right? So we'll keep an eye on this. If this is going to be, and the same with Ethereum, if this is going to be 5 waves here or 3 waves here, if it's going to be 3 waves, then we know it's going to be wave C of D and E here. But if it comes down in 5 waves here for wave C, then we'll know it's going to be wave 4 at that point. So having 3 or 5 waves here makes a difference. We'll be able to work through that in the next session. Sound like a psychologist. So the other way we could look at this, I can't remember what I've looked at here. So I'll just have to go through a couple of different time frames here. So this is another one here that kind of ties in the B wave a little bit, but not as much as such. So in this case here, we can look at this as an A, B, C for the A wave here, the B wave here, the C wave here for the A wave, an A and a B and a C for the B wave here, then down for 1, back for 2, and then all of this here. So this will take us a direct journey all the way down to where we want to be down here for this. But that means that we'll need to see the market trapped under 50. We would need to see this as a retested resistance. So we would see it sort of come through like this. It might check it a couple of times and do all sorts of weird things, but eventually we'd see it sort of fade at that point, you know. So we'll keep an eye on how that gets treated at this point. So we can look at it as an A wave here, a B wave here, then 1 and 2, and coming down here. Now this would put it probably in line with Ethereum, finishing off as an expanded flat correction coming down. There's another way we can look at this as well. We can continue with our triangle over here and put the B wave over here as well. I just don't remember what chart I put that on. I'll just take a guess here. No, that's not that one. Maybe it's a tick chart. Yeah, okay. So this is another way that it can be finished off. And this is okay too, because see, triangles only occur in wave 4s and wave Bs. So we could look at this here as an A, B, C down here for the A wave, and then an ABC for the A wave here, ABC for the B wave, ABC here, ABC here, ABC here, for wave E here for the B wave, and then 1 and 2 and 3 and 4 and 5, finishing a bit earlier down here for this, not going all the way down, which is quite possible because we know that there's really good support there. And then when you think about this one here with wave B being here, you would think that I suppose, sorry about that. We know that this one here, I think, has got another little leg to come down here for this and this one be down here, something like that. So I think it sort of plays out like this. And then we would need to look at the wave 4 here, pulling back up to the wave 4, 1 lesser degree roughly. And then wave 5 down here. So that could be the end of it there as well, in this case. Now, the reason that we would look at this for is that we would have to say to ourselves, well, how long is it? This is Ethereum here for that. Sorry about that. I don't even have that written there, so I should do that. You know, the question that we need to answer ourselves is that, well, how long is this going to take, or how's this going to play out? And, you know, and also with this crypto index, well, what are we going to get? 3 waves here, or are we going to get 5 waves here? I mean, if we get 5 waves here, then maybe that puts this one here into good stead. And we could, you know, look to go along here rather than further down, because we don't want to be fixed on it coming down to the 38.2% retracement level here, when it comes to here and then buggers off from that point and we're left scratching our heads, you know. So yeah, we just got to kind of keep being flexible and work things and so on. But we'll get there in the end. I'm just saying wave 4s are not easy. And I hope I've covered it reasonably well here for this. So as I mentioned yesterday, we'll be, you know, we'll be coming down because of this corrective pattern. We need to make new lows below here. So we've just got to keep monitoring it and keep talking about it, and so on and so on. If you're short here, then, you know, I think we may have talked about that at various times, but, you know, this number 5 being the second strongest number, and you'll see all your indicators being oversold, especially on the daily, anything from the daily chart under, you'll see it being oversold. The weekly is probably not oversold. But, you know, as soon as it, I mean, the thing with indicators, so we've got this low here. So when this comes down to the previous low here, then the indicators are going to suggest the same as well. When they break through the bottom here, indicators are going to flatline. I mean, the price is your indicator. Anyway, that's another story. I won't go into all of that. You need to see it first. Okay, I'll just leave it at that. So just to recap, whichever way we look at it, we're still going to be heading lower here for this. Tomorrow we'll just keep putting the puzzle, next video we'll put the puzzle together again. I'll do a video over the weekend if I think that it needs to be done. Otherwise, if it's just going to follow these patterns here, then I'll just chill on that. But yeah, anyway, folks, that's sort of that's where we are. We can see the 50 is a really good support, isn't it? And we're likely to get a bounce off that. I mean, this is the daily indicator here. This is the stochastics. So we can see that it's stretched here. It could flatline a little bit. I'll just check on the weekly because I'm not going to do much. But yeah, the weekly's just, you know, doing its thing there. So that's not much. Don't worry about the wave count there. I would like to see the market a bit lower. Do you know what I mean? Like coming closer to this wave 4 here. It's just a little bit far away. You know, even if it could come down here a little bit, that would sort of suffice that somewhat, you know. But there's still a lot to go on here. This is still very small for a wave 4. You know, but I did say that over here again as well, didn't I? I said this wave 4 here, maybe the ending diagonal triangle is correct. I'll have to check as wave 1 got 5 waves in it or 3 waves in it. I can't remember what the rules were on the ending diagonal. It's been a long time. But we can count 3 in here. We can count 3 in there. That kind of makes it valid a little bit. And it would also help this as a wave 2 here as well, being a smaller correction than this one here. But anyway, this correction here so far is too small for this degree of structure. So yeah, we may end up seeing it something like this here yet. We don't know, do you know? Just don't know. But I tell you one of I still, yeah, I was just thinking that, you know, it is corrective. That's the main point. So we know that it's corrective. So we know that we'll be making a new high at some point. That's the point. Alrighty, I'll leave it at that. I'm just waffling. Enjoy the weekend. And thanks for tuning in. Appreciate the support. Cheers.